What's up, guys? Nope. Hello?
We got you, man.
You okay? I don't hear myself anymore.
Well, you turned.
There we go. I didn't know how low can you go. Jay Do here in studio with Jonah. We are the Banking Bros here at the Cash Compound. We teach code cracking cash flow, and the top of the hour here, East Coast time, plus about 10 minutes. We're live on Thursdays, walking and talking you through how to have guaranteed income for your whole life, ladies and gents. So welcome to the show. We're not a two-man team, though. We've got several great folks on our team, including other coaches who teach within the framework of the save and spend system and infinite banking. And today we're joined by one of the greats, maybe the greatest of all time, Jesse Whole Life Durham. Jesse Dub Durham, let's go. So Jesse, welcome to the show. Thanks for being back with us, of course, on Thursdays.
Thank you. Appreciate that. The respect on that W too.
You put some respect on it. Make it a capital W, ladies and gentlemen.
Respect on his name.
Put some respect on that. So I'm saying that a lot. I go live on TikTok, and if you want to find us there, it's the Banking Bros or the Cash Compound. There's two different channels we have there, and you'll see more of our coaching staff and our great teachers and mentors on the Cash Compound channel, and you'll see Jonah and I more on the Banking Bros. But I say it all the time. Put some respect on it. Capital W. Now I get a few West Sides in the comments when I'm going live on TikTok. But the reason for that is because whole life insurance is a type of life insurance that is not the other types. So I use it to remind people that it's a proper noun here in this sense. It's a proper noun because it's not term. You can put a capital T on that if you like, but that expires or goes away. Also, it's not universal. Universal is very flexible. The idea behind universal is you have a flexible way to pay premiums. There's a flexible cash value account, and there's a flexible death benefit. So it's not that one because the guarantees aren't the same. So capital W, ladies and gentlemen, for putting some respect on it. And Jesse W. Durham deserves some respect as well.
Jesse, got a Mr. Fantastic from Jake Doster in the comments.
Yeah, I see that. Thanks, Jake.
Fantastic. Also,
is he talking about you?
For this?
He's talking about you.
A few weeks ago, is talking about me. Yeah. I say fantastic to a lot of stuff. Somebody asked me how I'm doing. Somebody asked me what's going on. I say fantastic very often.
That is accurate. Okay, you guys are gonna love this. A few weeks ago, Jake, who's out there watching, I was talking about the car wash.
I forgot about this.
No, I literally met Jake. He was right there at the car wash,
and he says I was in Florida.
Yeah, Jake's in the comments talking about some wasn't me. Okay, Jake Foster, Jacob Foster.
That is very close to Jake Doster.
Yeah, and that's why I was confused. And I was like, it clearly was you. It happened 2 days ago.
He's like,
Jake,
I'm glad to get this closure. I feel like the credibility was on the line. So
it was Jacob Foster, not Jake Doster.
And they're both clients of ours.
They're both clients
in the upstate of South Carolina. The northwest corner of our southeastern state has the upstate kind of region assigned to it, and so none of us believed or understood what Jonah was talking about.
And I was lost. I was like, I was like, my 7-year-old can back me up. I'm gonna have to get him on the next live. This happened to us, but anyway, that's what happened, folks.
Okay,
it was confusing.
All right, ladies and gentlemen, let's go. Jonah, give us a transition. I've got a topic I want to jump into. Infinite Banking Insights coming up right now. Each and every time we go live, we have a couple different topics we like to talk about, and it's easy to get into these topics based on the current events, what's going on in our lives. And today, for kids like mine and kids like Jonah's, it is back to school.
It sure is.
It's back to school this morning. So both of our kids, both of our families, we have more than, I have 4, he has 3. They attend private school. They attend different private schools, actually.
And private schools got bills.
They got bills.
I already know where this was going.
Okay, they got bills. But Jonah, you have some insights, not only in how policies can be used to pay that tuition, but also you've found 1 or 2 recent tricks to your situation.
Did I?
Yeah, because there was an offer from a grant.
There was
as well. So you have a few insights, I think, here. But first off, let me be reminded that our school situations were different. we grew up in the same household, but I saw something from what is her name? Mel Robbins, and just yesterday about what is his name? It's not an English name, so I forget how to say it. Oh no, but you guys know Mel Robbins, right? She is the 5-second rule. 5, 4, 3, 2, 1, count backward.
And then you can't eat it off the ground?
No, that's
Help me out.
no, the
That's
5-second rule.
5-second rule
The
to
5-second rule is when you don't want to do something. This is huge. It's a TED Talk that got like 1 million things 10 years ago and made
Okay.
it real famous.
Yep.
Okay, TED Talk. 5-second rule. So when you need to get up off the couch and go put your shoes on, you're gonna go to the gym.
Yep.
And you don't really want to do it. We all go to the. You actually count backward from 5. 5, 4, 3, 2, 1. It's very easy. It's very easy to change from this state to the next state by doing the 5-second rule. Count backward from 5 and go.
Jesse, back when I was growing up, the 5-second rule was determining whether or not you can still eat something off the ground. Have you heard of that rule, Jesse?
I have heard of that rule. Yes.
Okay. I'm just making sure I wasn't the only one. We actually, before we jump into this, we've got a couple quick shout outs. First and foremost, big shout out to our guy, Sean King, who has made it here to the live. Introduce yourself to the people, say what's up, and good to see you this morning.
Yeah, what's up, guys? Sorry I'm late. Sean King out here in Pensacola, Florida, the good old central time of Florida, right under there, under Alabama. Excited to be on chatting with you. I just finished up a call with 2 clients who set up calls with us to learn more about infinite banking, and both of them ran long because, boy, we get to talking about this stuff and stuff gets exciting. So happy to be here with you guys and looking forward to taking more of your calls.
Sean, is Pensacola, Florida considered the South to you?
Oh, yeah.
Okay. I was just checking.
Anywhere that they have a Confederate flag is considered the South.
Anywhere they have okay, that tracks for me too. I would have done that. Okay, I got to give a couple quick more shout outs to some people. Tony Shavers just joined us over on Instagram. Tony, what's up, man? We appreciate you, Tony.
Big T.
Yeah,
I love Tony.
Always in the he's always in the group and in the chat, and he actually just launched not launched, but he actually just posted about his renewal. He got his renewal statement.
So if you can hear us and put a comment in there, Tony Shavers, there's also, I'm going to ask you straight up right here. Tony is a fanboy of what we're doing, and he's been practicing infinite banking for a long time. One of the longest clients that we have, because he started before he found us.
Yeah.
He started before he found us because his auntie, Miss Robin is what we call her, Robin Washington, is also one of our coaches. So Tony, if you're out there, I'm going to give you the request now because I'll hit you up later for the formality of it if you're wondering what I need exactly. But I'd love a recommendation. Can you make us a video that says why you love your policy, why you love the cash compound, that type of thing? We want to use it somewhere, and I know you're going to be good for it. He's been on our podcast as well.
He says major fan.
Yeah, major fan. Yeah.
Another big shout out. Our sister-in-law, Meredith, just jumped over on Instagram also. We see you out there.
Are you still there? She may. Right. You know how family.
Jump on.
Yeah, family on and off real quick.
They jump off real quick, and then you try to give them a shout out for jumping on. They
were like, no, I don't. They don't want you to shout them out because family, and they're like, no, get off quick. It just pops up. Okay, I found the book, The 5-Second Rule. Sean, are you familiar with the 5-Second Rule from Mel Robbins, lady with kind of thick glasses most of the time? The 5-Second Rule: 5, 4, 3, 2, 1. You count backward, and it launches you into action. Are you familiar with that?
After you said it, yes, I am definitely familiar with it. But as everybody knows, the original 5-second rule is what Jonah was talking about.
Thank you.
We still abide by.
Thank you.
We still abide by?
Yes.
After COVID, I'm not sure. My 5 may. I'm 41.
We don't wear shoes in my house, so the 5-second rule is still okay. Definitely not out in public. I ain't eating nothing off the ground.
Yeah.
That's right.
Okay, and Meredith says she is there. She's paying attention. She's watching.
Hey, Meredith. Good to see you.
Man, we jumped into some infinite banking insights. So you want me to talk a little bit about school?
So what we've got is school started, and both of our families send our kids to private school, so they have bills. Jonah, give us infinite banking insights on covering tuition with your policies?
Yeah, so I'll walk through it just a little bit here, because obviously, if you want to send your kids to a school that has a tuition attached to it, then it's a little bit expensive. I've got 2 kids that are just starting school today. I got some pretty cool pictures of them stunting in their backpacks this morning. I'll post them on the socials later. So if you're following me personally, you can check out the kids there if you like. But anytime that we have to pay money for anything, one of the first things that goes through my mind is, what ways can I use? What ways do I have access to in order to use the insurance company's cash value, not mine? Right. And that's really, really important. I used to struggle with this in all categories, not just sending kids to school. This is a new thing for me. My kids haven't been in school that long, but I used to struggle with this in all categories because I used to be a really big saver. Really, really big saver. We've talked about this on a few podcast episodes. And I used to feel so bad anytime that I went to spend money. In fact, I had such a negative connotation with spending money. I wouldn't want to spend it. I worked too hard to save it. I do not want to spend it. So maybe even on things that were important or things that we had decided we wanted to do as a family, I'd say like, no, I don't want to. No, like I finally hit my savings goal. Maybe some of you out there have been there as well. I just saved 10,000. I just saved 50,000, whatever the number is.
That's like,
matter.
That's so Garrett Gunderson.
And I used to be like, I'm
Garrett
not gonna
Gunderson
spend anymore.
who wrote the book.
Yeah.
What Would Rockefellers Do? He has a kind of a one-man show around money mindsets, and he has characters, and he would call that the miser. The Dave Ramsey person. I'm so used to saving, I don't like spending.
Yeah.
That's Scrooge, right? Literally Scrooge.
Yeah, it might be.
Or from A Christmas Carol.
Well, that makes sense.
Yeah.
Maybe I've gotten a
The
Scrooge
miser
once or twice.
Yeah.
From people who hang around me too much. Because I don't like, I just hit the goal, so I wouldn't spend it. I just wouldn't. And so now that I was introduced to infinite banking and I've been doing infinite banking for a while, my mindset has changed a little. So instead of I saved up and I don't want to spend, it's now more like, hey, can I introduce infinite banking? Can I use the cash value from the insurance to spend on something? And so when you first get started with a policy or 1 or 2 or 3, it's a little bit tough, right? It's a little bit tough to figure out how I can pay for an entire tuition year of school with my policy, especially if you're just getting started. But when you've had policies for almost a decade, like I've got, that is absolutely something that's coming through my mind. So I had all summer to prep for how I was going to pay for school. Right? Does that make sense? I already knew the prices. They send out the prices early. We knew what school we were putting them in. I knew that this year, instead of 1 child, I had 2 children. I had all summer to prep, so I was prepping. Part of that process for me specifically was determining and figuring out exactly how I was going to do the bill, so that way I could use the cash value from my policy. And I had it all worked out. All right. They've got a couple different payment options at this school. You can do it over the whole year or 10 months, or you can do it all up front. You get a discount. I had it all worked out. I'm even became friends with one of the accountants at the school.
That's true.
And tried to get a deal. Like I was in.
Right.
I literally asked the accountant, if I was to pay you up front from now until like 6th grade, will you give me a better deal? I'll prepay you for until my kid hits 6th grade.
Do you think your kids are going to, I've met your kids. You think they can make it to 6th grade?
I think they'll be okay. I'm smart enough not to say like till they graduate high school or something, right? But I was thinking like, can I knock out these elementary years? I guess
all at once.
Yeah, middle school a little bit, I guess, right?
I don't know what middle school is anymore. Is it 6th grade? So
no, I think
my daughter started middle school today. She's
4th.
going to a middle school, 6th grade.
Oh,
it's a different school.
Okay.
Yeah.
Okay. So I think middle is like 4th, 5th, 6th. But anyway, I was planning. So does this make sense? Like I wanted to take control of the money that was going to leave my family. So let me plan, let me talk to, let me email. Okay. And part of this process was actually realizing that the state that we live in, South Carolina, has a education grant. And so I literally made reminders. I copied the instructions. I read the instructions. I applied for this education grant. And actually, because I was paying attention to the money, because I had the mindset shift, I discovered the grant. I actually got the grant. So the kids get to go to school. And I don't have to worry about policy payments at all.
Give yourselves a round of applause. Wow, look at that. That's crazy. So this is like... This is like doing sweepstakes back in my day. And Jake Doster Foster knows what those are. Anybody else? Sweepstakes. Like we're going to go through this thing and do all of the things that they say so we can get the money or win the thing.
Yep.
That's what getting a grant was like.
So anyway, and this relates to you guys pretty well, because what my wife and I want to do with our newly earned savings, we actually already increased our loan repayments back to our policy with the exact amount of money that we had set aside to pay for school. So that's already done. Going back into the policies. First payment comes out tomorrow, actually, because school payments, we had them due on the 15th. So August 15th is the first one. They kind of charge you a little earlier or whatever, however that works. So tomorrow, a big payment going into our policy that would not have gone if we were paying for school. We've changed where the money was going. We talk about that a lot. Change the direction the money was going and flowing. But secondly, my wife and I want to spend maybe a month or so in Costa Rica next summer. And we just got the funds to fund the trip by
Let's go.
applied knowledge, by paying attention, by planning ahead, by reading websites, by changing the mindset around what we were going to do with the money. We are going to take control, and that entire process, there's so many steps dictated now. Hey, actually, our kids get to go to school for free this year with the grant money, which means we have the money. Let's put it in a place, save it, control it where we can access it. And then actually we're going to apply that next summer, and we're probably going to do a month abroad, as they call it. I don't know if that's officially abroad. Is it abroad?
Yes, sir.
It's just Costa Rica. Sean,
it's just Costa Rica abroad.
Talk to me about Costa Rica, Sean.
You have to
abroad?
If you have to get past the
Costa
ocean.
Rica is abroad, yes.
All right, there you go.
You cannot just get there with your driver's license. They're going to need more information for you.
Yep.
And I've been to Costa Rica, and it's fantastic. You're going to love it. Little expensive. It's gotten way more popular, but you're going to love it.
All right, there we go. So that's a little bit about my school journey and some of the things that I've been walking, reading, applying for in the last month and a half, trying to prep for school. I know it's coming, right? We've make some jokes sometimes, people and Christmas presents. There's a lot of statistics out there. People go into some big time debt around the Christmas time area.
Baffles me.
There's been a couple jokes. I mean, maybe we've made them before that it's on the 25th this year, December. It's coming. Prep for it. Get ahead of this.
Yeah.
Right.
Jesse, question for you, man. Have you, Jesse, ever gone into debt over the holidays, Christmas, New Year's, a birthday, a wedding gift to someone?
I am positive that we would have put, stuff on credit cards before. I was actually thinking about my relationship with school and infinite banking, which is we used our policies to pay off student loans. I actually thought you might have planned on asking me that, but I'm sure we have put stuff on credit cards.
Okay,
before
talk about some student loans.
Yeah, go back to student loans then.
The forbearance has officially ended because of the government. I don't know, man. It was the CARES Act. I don't know what it was. Sean, I'm coming to you next after Jesse, because you've got a great student loan story also. But talk to the people a little about student loans. Interest is accruing right now on your student loans for the first time in 5 years.
Right. Yeah. It's been interesting having conversations with clients over the past, several months or whatever, where they were holding off on maybe using infinite banking for addressing student loans because they just weren't sure, this administration, that administration, what's going to happen, don't have to pay, do I want this out of my life? So that was my experience when I saw infinite banking in the beginning, this idea of becoming your own banker. And we had debt. We had car debt. So we owed on the family car. We owed on credit cards back then. And then we also had student loans. So student loans was one of those earlier tasks, projects, aspirations that we had of using policies to pay off student loans. We wanted it out of our lives, didn't want it hanging over us. And we did that. And then, of course, now we've transitioned to use policies for other things. But yeah, we did use our policies. Me and my wife, with our first two policies, we would have used our first two policies to pay off student loans.
Man, I love that. I really do. Sean, talk to us a little about your student loans.
Yeah, boy, that was a monkey on my back. So I had that stuff coming into my relationship with my wife. And obviously you get married, you have those talks about hey, what do you have? What do you have? She didn't have nothing. She owned a home. I had $40,000 in student loans. That was cool. She was a real champ for taking me on with that. But she knew that I was a hard worker and very interested in like, hey, how can we pay these things off? Now, at the time, just like Jesse mentioned and Jonah mentioned, there was no payments required that were being required to be made. So your boy was sitting back and just kind of figuring out what happened. Then they came out with the whole, are we going to get rid of them? Are we not going to get rid of them?
Yep.
I'm like, fingers crossed. I got accepted. I actually got accepted. They were going to cut them in half. And then they came back and said, just playing. We ain't doing that. Well,
Got him.
I was about to go from 40,000 down to 20,000. I'm like, yes, I can pay this off. I can do it. 'Cause I've been saving a little bit.
Got him.
God, that was straight punked. Would have been a great episode of Punked.
That's true. For the
so-
entire country.
Yeah, for the entire country. So I had 40,000. We had worked up about 20,000 in credit cards over a few years that it just kind of kept increasing. And we were actually in the process. We had just bought a piece of property in Texas, refinanced our house in Arizona, bought some property in Texas, but decided, hey, we're going to actually move to Mexico instead. Not New Mexico, the old Mexico, the one that you need the passport to get into. And so we decided to sell the land. So we had been saving. We're pretty good at saving money. We had sold the land. We got a big chunk of cash from that, which we took an L on. We actually lost on that. And so we had all this cash. I'm like, all right, so we're saving. We're doing this. We got all this cash. I just recently started a policy, my first infinite banking policy. And the thought was, I can't give Sally Mae $40,000. Can't do it. Not going to do it. Save this money up. We got this other money from money that we had sold the land from. I'm not giving them 40 grand and then it just being poof gone, knowing what I know about infinite banking. So we funneled that money through policies, ended up being able to take a large chunk of it back out, paid down the debt. Over that period of time, slightly over a year, we were able to pay off the entire $60,000 of that student loan. I actually have a recording of me making the last payment, paying that thing off. I might have given Sally Mae on my computer the bird, but free, done, clear, had that monkey off my back. It was a really good feeling. But to know that that money, that entire 40 grand that I gave them is still in my policy today, working for me, earning me continuous compounding interest is fantastic.
I love that story, man. And congratulations. Also, you didn't tell us, either of you didn't tell us what degree you earned and why you give them the bird if you signed up to pay for it. Come on now.
Scam me in the pay, man.
Did you get a degree? Did you finish school?
Yeah, I got a degree. I don't, because I'm in this little box, I don't know how much you guys can see, but I have a degree from Arizona State University, business management and communications.
All right. Is ASU, is that from Keanu Reeves on Speed?
Yes,
Sandra Bullock, Keanu Reeves, Speed?
I believe
Wildcats.
that is the ASU.
Wildcats?
No, that
No.
is U of A.
You got it.
That's
University.
That's the
of
one down in
Arizona.
Tucson, the old ugly desert.
Okay,
area.
that's the one from, y'all remember Speed?
I remember the movie Speed.
Okay,
They put
yeah,
a
yeah.
bomb on the bus.
Put a bomb on the bus, right? Stay above 50.
Jesse,
Yep.
what about you?
Jesse, what was your degree?
Yeah, I double majored. So I learned Spanish through college and I got a major in Spanish and then I double majored in criminal justice. So I actually pursued both of those careers, have careers in Spanish education and law enforcement in my background. It's just not what I do now, though.
Yep. All right.
Mm.
Love it. Okay, so we're going to transition here. Let us know if you have any questions, comments, and concerns out there on the chat. We want to hear from you. Let us know if you've ever even thought about utilizing this idea of infinite banking, not just for investments, but for maybe school bills, tuition for your kids, paying off Sally Mae, Fannie Mae, Freddie Mac, whatever it is, from your school debt. And if you still have debt, put it in the chat. Let us know. Tell us if you have a different plan. We'd love to know. But we help people with this on one-on-one cash conversations. We are all coaches doing this process. We'd love to chat with you soon. You can find our calendar. One of the best ways to go for our calendar and a conversation is going to be saveandspendsystem.com to get started with our introductory videos and to find our calendars. We'll talk you through how you also can get that monkey off your back and get rid of your student loan debt. Okay, I want to jump into a little book report action right here. Ladies and gentlemen, this book, if you can see it, is called Mapping Out the Millionaire Mystery. We actually are contributors. Jonah and I are contributors to this book. We're referenced inside this book, and it was authored by Brent Kessler and America's #1 money mentor, Chris Noggle. We're still good buddies with these guys. And I want to go through one particular thing here. Let's have a chit chat, Jonah, before I introduce our topic. We encourage you guys to get this book, and you can find it on our website, one of those places, thecashcompound.com and thebankingbros.com. We've got a page with books, and you can find an Amazon link there, and you can get your own copy. This book also comes in Audible, so you can get it read to you. And since we were contributors, I've actually never read all of the book, since this section particular is one of the places we contributed. I didn't read it at all. I just listened to it. Okay, so here it is. We're going to go through 10 critical mistakes infinite banking investors sometimes make that you will want to avoid at all costs.
I forgot about that chapter. That's totally us. Yeah.
Yeah, that's it. By us, it's me. You gave it to them. I wrote it.
That's fine. I wrote one of the chapters. It's like chapter 7 or something. I wrote all the charts I made in that book. I forgot. They should have put, man, I need to be.
That's why I said we're contributors.
Credits.
We are contributors to this book.
On that?
Yeah, we are somewhere in here because people call us because they say, "Oh, I saw you guys were referencing the book."
Put me in the front though.
Okay,
it's all right.
So this is what I want to do with you guys. I don't know if you guys have read this book here, but I'm going to go around to each of you guys. I'm going to start to ask, what are some of the mistakes? I originally crafted 10 mistakes that got titled in this section, The Marathon. That's the chapter, page 89. There are 10 critical mistakes infinite banking investors sometimes make that you will want to avoid at all costs. Jonah, we're going to start with you. What is one of these mistakes? See if it kind of matches up with the way I said it.
Inside of infinite banking policies. I'm trying to think back. I've been here before. I know.
Right. Obviously, we've all seen it.
Just one of them. They start with too little money. They
Number 7. Give yourself a ding, ding, ding.
All right.
All right. They don't put enough in.
Yeah.
They don't put enough in. Jesse and Sean, some people spend a lot of time trying to figure out how to put the least amount of money into their banking system. Remember that your premiums are deposits toward your wealth. Okay, Jesse, we're going to you. Give us another one of the top 10. Jonah, we'll describe it here. Jesse, you're next, but Jonah, go ahead and describe that. Anything else you want to say to people
who don't put enough money?
Don't put enough money in, or they think they should start with a small amount, or just how would you give commentary on it?
Yeah, you've got to just rethink your thinking, which is a different book and a different list. But you got to rethink your thinking. If you're thinking about the policy as a bill, if you're thinking about the policy as I'm adding this to my financial repertoire, but I'm also going to do this and this and this and this and this, then of course your brain says, where does it fit in and how much can you allot to it, right? But if you rethink your thinking, if you understand what's happening inside the policy just takes the place of a significant amount of other things that you probably got going on that you wanted to put money toward. And because of that, you end up putting a significant amount of money toward the policy. Now, it's kind of hard to do that first policy. I totally get it. A lot of people who start more than one policy with us, the second policy is bigger than the first one because of these facts. And so that's really what I'd say, like, plug in. I know you really, really want to get started, but like, go fast, read a bunch of books, watch a bunch of videos. Because if you want, the more you understand, the more money you'll do. I mean, it happened for, I think, both of us. My second policy is bigger than my first one because, I realized what was happening, and all of a sudden I came up with more money. I didn't have it when they called me originally.
Right.
And then all of a sudden, yes, I do. I'm going to do this. I'm going to do that. I'm going to do this because I want this goal. So now I'm going to allot all these other things toward that.
There you go.
And so I have more money all of a sudden. So anyway.
All right. Number 7. Well done, Jonah. They don't put enough money in. My second policy, a year and a half into my first banking system, my first branch of JDO, was not bigger, but I bought 3 policies.
Oh,
I bought 3 more policies. I went from 1 to 4. Okay, Jesse, we're coming to you, my friend. Give us an idea here. A mistake, a common mistake infinite banking investors sometimes might make.
Sure. It could be, and it's typically an early mistake or
Okay.
misunderstanding, thinking
see.
that the policy is an investment.
Okay, let me see if I put that one in.
Regardless if you put it in or not, it's gonna get you a sound.
Ooh,
right
okay.
there. Gonna
Yes.
get you a sound right
All
there.
right,
Jesse.
so
good work.
Our judge over here, the banker, says, yes, I did not include that in the 10 that I contributed to this book, so I want you to explain it. Looking, thinking, trying to understand their policy as an investment. Break it down.
Yeah, sure. And I've read the book, so there's that. And I couldn't remember what the 10 were. I was trying to recall, but I just know that that's a common early misunderstanding, that folks are used to putting money with somebody else, somewhere else, set it and forget it. Maybe it goes up, maybe it goes down, right? People are just mixing up what's savings, what's investing, and then this new concept that they begin to get exposed to, which is banking or financing. So that language still creeps into conversations that we have early on with clients, where they'll use that investment word. And we're clearly making a distinction to say, no, this is a place, a whole life policy is a place where you can save your money. It grows, it compounds, and it is, and here's the critical point, it's never at risk. It's actually the antithesis of that. Whole life insurance is us putting all the risk on the insurance company. It's a guarantee that our money is going to be protected. It's a guarantee that it's going to grow. It's a guarantee that it's going to compound. And it's a guarantee that it's going to create a pool of capital that compounds that we can use and leverage for our whole life as well. So it's not an investment because there's no risk.
My man, I love it. So I think you justified that one just fine. I like it. Sean, give us another one.
Wait, Sean, before you give us one here,
Oh,
you
yeah,
gotta
we
give
do
a
have
quick
something.
shout out to Rob.
What's up, Rob?
Rob says his first policy was small because of his mindset, but the next two policies combined for 10 times the annual premium of the first. What do you think about that?
Sounds like Rob had it. He just wasn't ready at the beginning. He was ready, but
Yep. Yeah,
he just
love
wasn't
it.
ready.
Big shout out to Rome the God over on Instagram, the Houston Hitman over on Instagram. We see you out there. Thanks for watching. Jeremiah, you're up.
Okay, Sean, your next one. I've got 10 in here. We've gotten 2 good ones from our other 2 coaches. They don't start with enough. They think of it as an investment, which was not a part of this original 10 in the book. What do you have?
I would say they don't continue learning about infinite banking and how to utilize the policy. They just get the policy and cool, I got it. We're good.
Cha-ching! That is number 2. Number 2, Sean. They don't continue their education. I want you to explain more of your thinking here and what people do when they're making that mistake. But you've begun a banking system, and it's a process. Dive in, learn, and read. Specifically, Becoming Your Own Banker by R. Nelson Nash. Help us understand your mindset between the product and the process that continues the learning.
Yeah, so the whole idea behind this concept is you're building a banking system. First things first, you put the policy in place. Have you ever had a banking system before? Have you worked at a bank? Have you run a bank? Do you know how it works? If not, there's probably going to be some continued education that needs to happen. The first word on the book is becoming, not became or I am now.
I am now your own banker.
Now the banker. I am now my own banker. I think that's one of the biggest things that we find with clients, with people getting into this, is people don't stick around the fire. They get the policy and then they're like, cool, I may use it here or there. But this is really just the entry point to so much more that's going to happen in your life when you become your own banker. And the only way to learn about all of those things is staying close to the fire, continue to plugging in, and keep learning, keep reading books like The Millionaire Mystery, The And Asset. I mean, there's countless books behind me that are going to continue helping you grow with your knowledge in this, because the better banker you can become, the better banking you'll be able to do. So the more advantage you'll be able to take, and you'll have a better understanding of why I need to keep growing my banking system, just like Rob did, I'm sure, the second time around when he got his much larger policies. He was better educated.
Yes, that's a great question for Rob. Rob, are you utilizing your banking systems for more things then? It's way bigger. There's going to be more growth and cash values in there. Dividends are coming to you on an annual basis if you're utilizing a mutual company. So, Rob, the question for you is, what are you doing with it, baby? Is it back to school time for you? Is it getting the money off your back, or is it putting the kids back in school potentially, like Jonah and I, paying tuition? All right, that was round one. We'll go one more round, Jonah.
I'm ready.
What you got
You
here?
said
Another
something
one.
that inspired the new answer
Okay.
from me. So I'm going to get real close to as close as I can get right here. While I say
The camera's like 8 feet away.
it is 8 feet away. It's that people don't repay their loans.
Oh, they don't repay their
People
loans.
Don't repay the loans.
Give me a cha-ching. All right, number 5. The way the money multiplier friends of ours put it is they don't recycle and recapture. Okay, principle number 1 is pay yourself first. Principle number 2 is pay yourself with interest. We might say pay yourself back with interest. Principle number 3 is recycle and recapture everything you spend. Reclaim all the money that once went out to conventional banks, mortgage companies, and creditors. Jonah, explain.
Yeah. So the whole idea of banking is that you want to make money, right? That's what's key. You want to make money. Banks do not make money by lending money out. Think about it. If everyone in your town, on your street, walked into a bank and said, I'm going to ask the bank for a loan, and the bank grants the loan, the bank just handed out lots of money, but the bank has not received anything, which means taking the loan is not the money-making piece here. The money-making piece is the loan repayments. Now imagine that bank with everyone who took money from them, and before they left the branch, the institution, they made them sign on the dotted line, and they said, here's all the money you've got to repay every single month. Here's the interest rate, right? All that stuff that goes into taking a loan. And then all of a sudden, they've got everyone on your street, everyone in your neighborhood, everyone in your town making payments every month. Right? That is the definition of what cash flow. And that is absolutely the definition that banks use in order to make money. I mean, now I've got all the money coming back that I lent, my principal's coming back, and I put interest on all those notes. So I got all that interest coming back. And I've got it coming in a cash flow stance, not even all at once. It's coming in. Some people pay on the 1st. Some people pay on the 15th. Some people pay every 2 weeks, right? It's a cash flow thing. I loaned it out once, and then I just generated cash flow coming back in. And that's what we are looking to do with these policies also. And that's the key step to making money. You got to actually take the loan, sure, but then you got to have them, you got to repay. That's the money-making step.
All right, very good. Okay, we have a comment that came through from a question we asked Rob, and then I have a question for Jonah.
Yep.
All right, Rob says, absolutely using for all of the above. The question that I asked Rob was, are you using your policies in a bigger, better way? Are you using them for tuition, student loans, or anything like that? Now that you have more than one, and the second version 10 times the size of the first.
Yep. He said, yeah, everything, but just not tuition because they homeschool.
They homeschool. Okay. Shout out to the homeschoolers. Jonah, have anything to say?
Rob, I was homeschooled. I turned out okay.
Jesse,
keep
anything
going.
to say about the homeschoolers?
Yes, it's nice to hear Jonah confirm that he turned out all right, and I can concur. Yeah, no, I've had a great conversation with Rob, interview conversation that's on my YouTube channel. Actually, everybody should learn more about Rob. He's doing some stellar things.
Yep.
All right, cool. So Rob, appreciate that. I love it. Okay, so here's the next question. Jonah, are you saying 2 different times on this broadcast, are you saying all the sudden?
Did I say
Twice.
all of a sudden? Okay.
All of a sudden.
What are
all
you saying?
of a sudden.
Is that the proper way to say it? I've never heard that. Somebody confirm. No, hold on. We got a Spanish major in the chat.
So let's say it in
means-
Spanish.
which means he probably knows more about English than we do also. Is that the proper term, Jesse? All of a sudden?
I would
All
definitely
of
say
the
that I learned
sudden.
more about my own native language by studying a foreign language, which is just wild because my eyes got glassy when English teachers would be speaking, but I had an interest with Spanish. I didn't catch on to it. I mean, obviously, J-Du's going to pick at you for, slurring something or just any excuse, right? So I would accept either. I'm going to play the middle of the road here.
I love it. Sean, have all of a sudden, all of the sudden, all the sudden. What? Why are you laughing? That's
Hold on. You're
muted.
You're muted,
Sean.
Sean. You're muted, Sean.
I thought it was the combination right there that you said in the middle. I thought it was all of the sudden.
Yeah,
Duh.
thank you.
No. But what's correct? That's what we're asking.
You're asking the wrong person, man.
Okay. He went to ASU. What do I know?
What if it's just one word, a sudden?
A sudden. All of a sudden.
from the
Somebody
Latin.
in the chat, help Jonah out.
I've never
help
heard
everybody
all
out
of
there.
a sudden. I read
Give him a
books now.
break. He was homeschooled.
Right.
Okay. All right, here we go with the next one. So, Jesse, we're coming to you. We've got one more. See if you can find, give us something that is a mistake infinite bankers often make when starting policies.
Yeah, again, I have no idea if it's in the book, but one that I would say from experience, both personally and professionally with coaching people, and I'll use myself as the example. Like I said earlier, used policies in the very beginning with a strong desire to pay off debt. But knowing what I know now and having coached other folks through debt recapture, I would say that it's actually a mistake to not acknowledge what Nelson calls the golden rule in the Becoming Your Own Banker book. So he says the golden rule is he who has the gold makes the rules. So what I would say is even if somebody has a strong desire to invest, to pay off debt, whatever they're going to use a policy for, I encourage people to do that from a position of strength now and not over leverage. Like I had a conversation earlier to guys, so it doesn't have to be debt, right? But me, in the beginning, I took max loans. I was max funding. I was paying as much premium as I possibly could. But then I was also making maximum loans because I just wanted to pay that debt off super fast. Whereas now I would say if I'd have been a bit tempered, right? And everybody could pick their own number, but held some reserves, held some gold, right? So to speak, to still operate in a strong position. That way, if some unexpected, financial crisis happened while I'm aggressively paying off debt, I still have some buffer. I still have some reserve, right? And again, I started to reference, I had a conversation with a guy earlier today who's talking about taking out $100,000 policy loan to invest in, teak wood business somewhere in Central America. I mean, so no matter what people are using it for, doing infinite banking still with some reserve capital, place of strength, golden rule.
Ladies and gentlemen, we're going to qualify that as a yes and close to number 3. Number 3 out of the 10 that comes out of this book, Mapping Out the Millionaire Mystery, of the critical mistakes infinite banking investors sometimes make that you want to avoid at all costs. They don't take loans. That was as close as we could get. So they don't take loans. Here in the book, it says, Jesse, use your dollars in the system. And remember that you are never withdrawing your own cash the way we teach it. You are borrowing the insurance company's money. There you have it. So I think that was close enough, and that's going to help our audience. Okay, we've got one more here before we're going to wrap up our hour. Remember, top of the hour, Thursdays Eastern time, every Thursday, we're going live with a cash coaching session. All of us actually do this process. We call it the save and spend system here. Infinite banking is the core model of utilizing a whole life insurance policy from a mutual insurance company that pays dividends for your own cash flow and banking wealth creation system. Sean, give us one more to close us out.
We got to give a big shout out first to James Huerta, Gorilla Roofing, and all the folks over there who are watching over on Instagram. We
so drop your questions, comments, and concerns wherever you are in the chat. Shout out to our folks on YouTube, on IG, and on the Facebook group and page.
There you go.
Sean, give us one more.
Yeah, I think there's a lot of confusion And we actually just talked about this, Jeremiah, with one of the clients that we had on one of our little group calls, was the idea of not knowing when to start a second policy or a third, like start your next policy. So
that is correct, Sean. That is one of them. Tell us all about it, and I'll read the comments from the book.
Yeah. So when knowing to start your second policy, so there's a couple times that you'll know that you'll be able to start a second policy, or that you should be starting a second policy. One of those is if I'm funding my policy for a certain amount, there is a specific amount every month that I can max fund my policy with. We send out an email, we ask the carrier, they let us know this is how much you can put in. If I have more cash flow than that coming in on a monthly basis, that means I'm filling up my bucket, whatever. Let's say it's $2,000 extra I can put in every month, but I have $2,500 every month. Where is that extra $500 going? Most people will just leave it in their bank account. That's not what we're suggesting you do. The suggestion would be, hey, that's dollars that aren't working for you in the most efficient way possible. We now take that 500 and we start a new policy with it. The other time is, or the other scenario is essentially, hey, I've been funding my policy. Maybe I have some loans out, so I have money going back to fill up my loans, and I'm also max funding. And maybe I get to the point where I pay off the loans. Maybe I don't have any more room in my policy, so there's extra cash. Anytime you essentially have extra cash that you can't put into the policy on a consistent, regular basis, that should be when you're calling us up and saying, hey, I've got this extra cash. What do you think I should be doing with this? Do you think this is a good size to start a policy, or should I bank a little bit more before starting a new policy? So just not knowing when to take that next step and expand the banking system.
Love it. Sean is right. Inside the book, it says number 8 is they wait too long to start more policies. Some people wait far too long to start more policies in the system. Remember that these deposits are compounding uninterrupted every day. And Sean gave you more on that. So shout out to our friends, Brent Kessler and Chris Noggle, the Money Multiplier guys. If you want to follow them, you're going to find some great stuff. Those 10 things total, guys, here they are. They don't think long-term. Number 1, they don't think long-term. Number 2, they don't continue their education. We did talk about that one. They don't take loans. Jesse brought up something that was very close to that. They don't use their free tools. We also have free tools.
Yeah, they don't plug in.
They don't plug in. Sean kind of said that. Number 5, they don't recycle and recapture. Jonah talked through that one. It's number 6, guys. They don't change their bad habits. They buy a policy, the product. They do not reshape how they think or what they do.
Yep.
They don't put enough in. We talked about that one. Number 7. Number 8, they wait too long to start more policies. Shout out to Sean. Number 9, they don't share the information. They don't share it with their family members, their friends, their business partners they're working with. Money's taboo. Income is scary. Of course, a lot of people are less educated and ignorant at the beginning, so they may have a hard time. We'll help with that. We have family financial reunions we can do with your family members. And number 10, they cancel their policies. They cancel their policies. Why? It's too expensive. Oh, you don't need that. And it's only for a certain amount of time. So life insurance is something you just keep until you don't need it. Jonah has opinions about that one. That's for sure.
I do.
Okay, ladies and gentlemen, we appreciate you being here with us at a Cash Coaching Hour. Remember, Thursdays, noon Eastern time, we're going live. Shout out to everybody. Give us one last thought in the chat or a thumbs up if you liked this conversation today. We're talking back to school. We're talking tuition. We're talking student loans. And we're talking about mistakes people often make when they start their save and spend system. Remember, you can find this book on our website, thebankingbros.com/books or something like that. But there's a drop down in the upper menu. And several other books you probably want to check into. Join us on that Facebook group, Infinite Bankers. It's a private group, and you can ask your questions and be safe in there and get into a conversation and a relationship with one of these 4 coaches or another coach on our team to help you with code cracking cash flow. Ladies and gentlemen, we guarantee we can help you understand how to have lifetime income. And so we want to be on a conversation with you soon. Peace out, everybody. See you soon.
Now tuned to the banking bro. Said we couldn't make it, 3 coaches control. Gave a lot of game, we never got a lot of things. Bow your head and say saying a prayer, we taught you how to be the bank.